And welcome to Capital Market Live on Channels Television. I'm Ladi Williams. It's time to summarize all that happened in the markets this week. It's been an incredible trading year for most markets in 2023. With all of the fears, we've seen most of these markets perform so well. Let's get a check on how the international markets we tracked here fared. The European markets closed slightly higher on Friday, rounding out a positive week after the issue of key policy decisions from major central banks. The Pan-European Stock 600 index ended up 0.1% after giving back earlier gains of around 0.5%. We see mining stocks have climbed by 1.3%, while telecoms actually dropped by 0.8%. We see the DAX there unchanged for Friday's trading session, while the CAC 47,596 points, up 0.28% to close on Friday. Let's get a check on Asia markets now. We see most markets in Asia climbed, led by Hong Kong, as Wall Street continued to rally after the U.S. Federal Reserve held rates and laid out a roadmap for cuts in 2024 and beyond. Hong Kong's Hang Seng Index led gains in Asia, closed about 2.38% higher, while the CSI 300 index reversed earlier gains to fall 0.31%. We see the Japan's Nikkei 225 also rebounded from Thursday's losses, up 0.87%, and ended up 32,970 points. So let's take it to the U.S. now. We see the Dow Jones Industrial Average close higher on Friday after a whipsaw session where it marked a fresh intraday record, and the tech-heavy NASDAQ 100 set a record close. We see all three major averages scored their seventh straight winning week. The Dow closed up 56 points, about 0.2%. We see the NASDAQ, the tech-heavy NASDAQ, that closed up 0.35%, while the S&P 500, that was the laggard, marginally down about 0.01%. Now we see the year started off with a lot of anxiety about potential recession, but it's ending with Wall Street on a tear. But the Magnificent Seven, made up of Apple, Amazon, Alphabet, Nvidia, Meta, Microsoft, and Tesla, all big moves up this year. If we pull out that slide for me now, we see most of the Magnificent Sevens there. Alphabet, 50.14%. That's the returns year to date. Apple has given up 52.47% profit. Amazon, that's 75%. We see Nvidia, that's the biggest mover this year, 230%, with Tesla falling with 103% gain. They're all up big this year. Let's bring in Olumide Addition, our financial market analyst. Great to have you, Olumide.
Yeah, good evening, Ladi. It's been a stellar year for stocks market.
Yeah, it's quite incredible because with all the fears of recession, inflation hitting new highs all over the world, everyone was ready to run into safety. But it turns out risk paid better, this year. And we're seeing the Magnificent Seven here, all up over 70%. Why were they so magnificent this year?
Wow, it's just been wow, Vladdy, because if you look at the numbers right now, Apple is at its record high. The stock closed at a record 197 on Friday, pushing the market value at almost $3.1 trillion. That is so big because it's almost the equivalent of Europe's biggest stock market, the Paris Bourse. And pretty much, just like you really highlighted the start of the year, there were concerns that the hawkish narrative relative to weak consumption, job layoffs, the economy eating in the world's largest economy, and also looking at China, where we saw real estate concerns, and that really created high anxiety. Also, the effect of Ukraine, Russia, and recently what we're seeing in Israel, pundits were expecting that at some point there will be a dip. But if you look at the markets right now, it's like the big seven are really rallying. Microsoft now has a market valuation of about $2.8 trillion. And investors are betting that their investment in OpenAI, $10 billion investment, really pushed optimism that they are relevant in the future. You know, what AI is doing in terms of cloud computing, in terms of payments, in terms of economics, you know, and the future seems bright. But you can't take away the star away from the room. You know, last year it was Tesla, this year is Nvidia, and that was basically because of AI. You know, they had invested so much into that technology, looking at the futuristic aspect of humanity, and I think it really paid off. You know, concerns were about Nvidia because at some point a lot of investors thought they were relying on Bitcoin mining, and when the Chinese at some point banned, that stock really dropped. But you look at it this year, it's up 250%. You know, it's so good that I was saying that if you were a blind person and you invested in those 7 stocks, you know, cumulatively you have made 70%. You know, the last time I've seen that, you know, it's just a Nigerian stock market that looks closer to that. But you know, interestingly, while it looks like the market is rallying to record, it's just the big 7 that have been outstanding, because when you remove them away from the S&P, that's the index of the top 500 companies in the United States, you see that it just has a 6%. So the fact that the S&P is up 21%, it tells you that these big boys are the elephants in the room. So Ladi, right now, I think it's been a very good year for Warren Buffett, because Warren Buffett has a significant exposure in Apple. And unsurprisingly, that was why we saw Berkshire Hathaway having about $157 billion in cash, you know. And, you know, the gist on Main Street was maybe Nigeria should get $10 billion needed for these guys. But, you know, it's been a very, very cool year for US stock market.
And definitely 2023 being so cool, I wonder if 2024 will be even cooler. What are you seeing?
Well, looking on paper, the reverse, because the US Fed had hinted that there will be rate cuts. That will definitely boost consumption and also increase risk appetite. But you see, the issue the market right now is that some of these stocks are already trading at their highs. So are we saying Apple will really get to a 4 trillion market? Well, it seems unlikely, but you know, you can't bet against these stocks. So I think his optimism is being cautious here. And, you know, we're looking at geopolitical concern, particularly in China. Growth is slowing. If you look at the stock market in China, it's one of the worst performing. And unsurprisingly, and that's because of the real estate concerns and the fact that liquidity is drying out. So the country recently pumped about $120 billion into the financial system just to elevate fears. But that tells you how fragile the world is. And if you look at oil prices recently right now, you know, oil prices have dropped close to the $70 per barrel before boosting up. So World Bank's outlook forecast and the IMF tells you that optimism is cautious, but you know, you can't bet against the rally of the US stock market right now.
Right. At least there's still some optimism in there. Thank you so much, Olumide Additional, financial market analyst, helping us break down what played out in the US markets. Thank you.
Thank you for having me.
All right, let's bring it home now. See, the month of December is looking quite bullish for the local equities market as the NGX closed the week in positive territory. We see the all-share index there, 1.18% gain. It's closed at 72,389 points, a level not seen before in this market as investors bought banking stocks in the trading week, which ended Friday, December the 15th. The market recorded total turnover 1.88 billion shares, worth 31.63 billion naira in 33,020 deals. To sector performance now, see the NGX banking index rose big, 7.01%. NGX insurance, that was down about 0.96%. Industrial was up 0.24%, while consumer goods, that gained 0.22%, while the oil and gas index, that was down 0.27%. Mutual Benefits Assurance PLC led 53 gainers for the week, while RT Briscoe led 32 decliners for the week, trading in the top 3 equities, namely Access Holdings. Well, if we look at the other markets now, talking about the unlisted securities market, we see there was positive sentiment also in that market. There's positive sentiment everywhere at this point. The NASD OTC index and the market value jumped about 1.85% to end the week. The total volume traded in the week was 647 million units, leading to over 2,000% jump in the NASD trade volume. It was also over 700% rise in the total value traded during the week, as NASD investors traded about 1.38 billion naira. Arido Holdings PLC led the top gainers for the week, while Central Securities Clearing Systems PLC led the losers counter for the week. All right, joining us now to review the unlisted market for the year and see what's in store for 2024. We have Oludare Fajimolu, Head Research and Strategy at NASD. Great to have you on the show. Good evening.
Good evening, Lodi. Thanks for having me.
All right, so talk to me about what played out in the unlisted market. The week ended. We say it was a positive close.
Yes, it was a positive close in the market, largely driven by increased investors' activity. So that's evidenced by the number of deals. The number of deals increased by 41% week on week. And that was because of increased participation. The volume and value of the transactions spiked during the week. And largely, investors are one, there's a general positive sentiment, and then also the fact that the year is coming to an end, so there's a little bit of portfolio rebalancing going on, and investors are trying to adjust their positions in order to align with their portfolio, with their investment objectives. And, but secondly, like I said, there's a general positive sentiment in the markets, and that's what you see. That's also reflected in specific names like Union Bank, I beg your pardon, UBN Properties, Paradise Holdings, and the rest. So those are the companies that actually drove those spike that we saw in the volume in the market.
Yeah, it's quite interesting. We're also seeing bullish sentiment in most of the markets here in Nigeria, with inflation at an all-time high. We're seeing currency devaluation at this time. The Naira's definitely hammered in the markets. A lot of volatility right there in the market, but we're seeing this market still powering on. Since 2023 is coming to an end now, let's look beyond last week and discuss 2023 now. How would you describe and summarize 2023 for the NASD?
2023 was mixed, but by and large positive. So we had similar challenges in the macro space affecting the market as well. So of course, as we all know, beginning of the year it was an election. It's an election year, and then the currency policy that's led to the scarcity of the naira, so stifled economic activities, and so coinciding with the general elections, that's shifted a lot of attention away from the economy towards the polity, and then caused a lot of uncertainty in the atmosphere as well. And that's also reflected in the numbers. So in Q1, for instance, the total value of trades were just about a little above 4 billion naira. The NASD stock exchange and the securities exchange. While, but by the time we got to Q2, where the elections were over, there was relative stability in terms of the economy and so forth, the value of transactions spiked significantly by more than 500%. That's more than 5 times from Q1 to Q2. And the market transactions have stabilized relatively since then because of relative clarity in terms of points, because of the direction of the situation. But generally, beyond that, we as a company, of course, internally, the economic challenges made us to definitely affected our cost structure, but we used that as an opportunity to address certain other aspects of our company. So things around the brand equity of our company, and so that coincided with certain positive milestones for us. And so at the end of the day, the positives outweighed the challenges. So for instance, we successfully got the approval from the Securities and Exchange Commission to successfully introduce our mobile app, which has been in the pipeline for a while. And then our enterprise portal, which is the NASD, that's the NASD enterprise portal, also became operational this year. So we had a couple of transactions that were signed up to the platform. That's the platform for the SMEs. So we have some transactions going on that went through, and a couple of others are still in the pipeline. And very important milestone as well is the digital securities platform. Digital securities platform, we received the approval to go ahead from SEC as well to proceed into the regulatory incubation program of the that essentially means that we now have the permission to operate a digital platform within a controlled environment. So and we already have transactions behind that. So that's a major those are major milestones for us. Then of course we gained some traction, significant traction with our engagements with other regulators such as PENCOM. So securities that now comply with the securities that are listed on the NASD that comply with PENCOM rules. There's the PFX cannot invest in such things. So those are at the end of the day.
You guys have been quite busy over there at the NASD listed market there, but we'll definitely come back. We'll take a quick break now. We'll get a sense of how regulatory changes impacted the unlisted market. That's a moment. Do stay with us. Welcome back to watching Capital Market Live on Channels Television. We've been recapping the NASD unlisted markets, check the performance of 2023 and see what's coming for 2024. We've been speaking with Oludare Fajimolu, Head Research and Strategy at NASD. Thank you for staying on.
Thank you.
Fantastic. So talk to me about how, we've seen a lot of regulatory changes right now and government policies, from subsidy removal to the floating of our exchange. How have all of these impacted performance of the unlisted market in 2023?
Okay, so in terms of regulatory, the impact that the regulatory changes of regulation have had on the market, we've seen that quite obvious in the oil and gas space. So as we know, of course, definitely the removal of the subsidy on one hand, and then the efforts of the government also to attract investment into the sector. And so that's a major factor, because we realize that some of the major drivers in terms of the price performance during the year came from that space. So you have the likes of Aradel, that's former Niger Delta Exploration and Production Company. Aradel Holdings as currently is trading at about, as appreciated by more than 400%. You have also Acorn about more than 300%, about 368% thereabout. You have also Geofluids, which is an oil servicing company as well, trading at approximately 279% thereabout. So the logic is that as investors, investments will enter into a particular sector, this value creation in that sector is going to increase. And so investors, companies within that space are benefiting from that logic. And of course, if you also look at it from the other equity, from the other investment side, which is the fixed income market, we realize that while yields were down, the broad equities space gained and appreciated a lot. But now that yields are creeping up, that may change a little bit. And of course, because of the prognosis of the deficit funding for deficit funding of the budget in 2024, that may extend into the year. So currently, so those are the effects that we're seeing, and we are also tracking.
All right, let's look at I know NASD is known as the exchange for unlisted securities, but from what you've said, it seems there's more to come, with the NASD there. You talked about the trading app that will soon be launched, at this time. Talk to me about what else we can see coming for the NASD OTC exchange?
Yes, you're right. So the mobile app is actually an extension of the OTC exchange itself, the platform, which is our flagship platform. But currently we have see ourselves as one company with multiple platforms, and we have approval for several other. These platforms have different forms of approvals as well, and enables us to deliver value for different segments of the market. So in addition to the mobile app, which is the NASD mobile, one word, there's also the enterprise portal, which is the portal that is targeted at creating, at meeting the capital needs of SMEs. So SMEs can actually begin the interaction with the capital markets through the enterprise portal of NASD. And then, of course, there's the digital securities platform that we recently got the approval for as well. That is good. That is being powered by blockchain technology, which means it's going to increase the efficiency of the market, increase the trading hours of the market. It's another asset class is also going to be introduced, which is digital securities. And so a couple of other things that we are also working on, and we are positive that by this time next year, we should have at least 5 platforms that are operating within the company.
Yeah, we'll definitely be looking out for all of that, and definitely all trades are going mobile at this time, so it'll be great to see that NASD mobile there coming on stream. Thank you so much. It was great having you, Mr. Oludare Fajimolu, Head Research and Strategy at NASD. Thank you for sharing your Saturday with us.
Thank you, Fab. It's a pleasure.
All right, let's take a look at some top stories now. See, the federal government has brought about 10 trillion naira to finance the 2023 budget, with about 8 trillion raised from the domestic market, according to the Director General of the Debt Management Office, Mrs. Patience Oniha. With about 9 trillion deficit in the 2024 budget, Mrs. Oniha says that the federal government will once again depend heavily on the domestic market. Take a listen.
This year, there's about 8 trillion or thereabout of new borrowing as well. In the domestic market, there's still liquidity, there's still some robustness around it. Don't forget, we have a very active fixed income securities market. So this year, for instance, we have raised 7 trillion naira, which is the full amount provided in the 2023 Appropriation Act. So achieving the same next year should not be difficult. I didn't say it to be all smooth or all easy, but to the extent that we keep offering products that investors want, by that I mean tenors, product variety, so there's sukuk, there's, if you want the FGN bond or treasury bills, that is there. But also that we have an investor base that is also growing. Your banks are growing, your insurance companies are growing, your pension funds are growing, other asset managers are growing. So if you put that together, there's optimism.
It's Patience Oniha, the DG DMO. So also this week we got that hot inflation number for November, with headline inflation rate now heading to almost a 2-decade high, as it soared to 28.2% in November, up from 27.33% recorded in October. Key highlights of the report shows that food inflation rose to 32.84%. Core inflation slowed to 22.38%, while urban inflation jumped to 30.21%, while rural inflation increased to 26.43% in November. And that's the show for today. You can watch us again on our YouTube channel. Just flip over to YouTube/Channel Television. From me and the team right here at Lagos HQ, it's bye for now. Remember, always sell at the top.